Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and the sugar clearly seems to be making all the headlines with concerns that there could be some directive that would lead to curbing in sense of buying sugar for ethanol as a production. So clearly has a lot of impact and repercussions that we could see if that happens. But we have had, as of now, some clarification coming in from the relevant ministries that at this point in time, there is no directive to do that. But there are, of course, a lot of conversations happening. But let's get in a sense on what happens if there are actual curbs and how is the industry looking at it? What is the sugar industry overall right now approaching it as? Joining me to have that conversation is Rahil Shaikh. He's MD at MEIR Commodities. Rahil, hi. Not a very great time because of the kind of news articles that seem to be doing rounds from various media houses there. As of now, what we understand is there is no directive as yet, but yes, something could be in works and there's no clarification on that. How do you look at the overall numbers stacked up when you look at ethanol as a policy in the Indian markets? The other thing is that for the marketing year 2023-24, there are no guidelines or policy that has come in from the government yet. How is the industry, first of all, looking at it?
I think, Manisha, ethanol is something which is the lifeline today for the sugar industry. So any disturbance to the lifeline, I think it's dangerous currently. I mean, the amount of investment which has happened, the amount of stories behind the ethanol blending of around 20%. That's what I say. It's a lifeline to the sugar industry and the sugar farmers as well, just not industry, because at the end, whatever the earning is coming is going back into the FRP and to the farmers as well. So I think any direction of which can be any decision which can be to sort of stop the ethanol blending by sugarcane juice or be heavy will be very, very detrimental for the profitability of the industry, for the survival of the farmers as well, because as I mentioned, the FRP 90% of the cost of the production is sugarcane. So all what is the investment done, I think it will be a disaster. So I think there needs to be a discussion on why this relevant topic came up, because we have been discussing 20% blending until day before yesterday. So I'm not sure as to if this continues to be a rumor or there is something which is making noises at the power board.
Well, absolutely fair. Let's leave that aside for a minute because we don't know on what really is happening there. But just standalone, when you look at the ethanol policy, and the government has been quite supportive and excited about that. We've seen them talk on so many platforms there. So when we talk about the 20% blending by 2025, what are the kind of investments that we have seen right now? What is the kind of policy measures or push that you would require as an industry for that to be achieved?
You see, if you look at 20% blending, it needs to come 5 to 6 billion liters needs to come from sugarcane. Unless if sugar is not there, I think we will not be able to achieve even 5%. Grain is suffering. You have already seen rice is not helping too much into blending. So technically, if you look in the last 4-5 years, we went on from 1 billion liter to 3.5-4 billion liters of our capacities and ever growing. So investment is coming. I think we were able to invest. The industry could sort of produce about 5 billion by the 23-24 season. So there is a lot of investment which has happened. I mean, if I have to put it into value terms, it will be very difficult. But I think anywhere between 70,000 crore to 1 lakh crore has been invested into it. So the capacity is now set up for achieving this 20% blending, and only sugarcane can bring in about 10-11%, and rest can come from grains and rice. But if we only go basis C heavy molasses, then I think we will be down to around 8 to 9%. I haven't done the mathematics, but thumb rule says that we will be able to go down to 8 and 9% if any disturbance is done basis the cane juice or be heavy.
So, I know sugar as an industry is slightly concerned right now, and I also know that sugar as an industry is trying to seek a meeting with the relevant ministries also to get some clarification. But also talk to me about the fact that the way we are moving from here, and I also know that a long-term ethanol pricing formula is something that the industry has been seeking. What is that conversation? Where is that headed? Because this is a long-term policy that you're looking at.
Yes, I mean, I am not privy to that meeting, so I wouldn't know whether it has been called and what kind of what is the agenda for the meeting. But I'm sure it's, as I mentioned, it's a lifeline. So any disturbance to that policy, I think associations like ISMA, AISTA, all would be at the power corridor today, and they should be. But to answer your second question, Manisha, I think in my opinion, the policy needs to be continued. And for 20% blending, if sugarcane is not available, then I think the blending will suffer big time.
What is also your sense on the sugar prices itself? Because we know we are in election period. We also know that we're looking at the strong wedding season right now as well. So we know we are looking at a lower crop as compared to previous year as well. So looking at all of those factors, what is the kind of availability that we're looking at?
I think sugar pricing wise, domestic is quite sorted. I think government is not worried about the domestic prices at all. Last year they could manage the sugar prices between 32 rupees and 37 rupees in Maharashtra. And current year also, we feel that it will be between 32 and 37 or 33 and 37. In case if there is any kind of anomaly which comes in due to the ethanol policy, then probably we may see a big drop in the sugar prices because there will be an excess production. But in my opinion, I think the domestic price is very, very sorted. It is within the range of the government with comfort level. I don't see any disturbance in that because we have a good opening stock of about 5 million tons. We have a production which is around 29.5. Even if we consume 28.5, we will be adding 1 million ton to the stock. So I don't see any issues as far as the domestic availability is concerned. As regards 24-25, there are concerns being discussed about, but it's too early. I think even if in 24-25 we have 27.5, we will be having an opening stock of about 7 million ton. So I think we are sorted as far as S&D is concerned for domestic market, and I don't think so there is any chance for government to give anything on exports. So I think the world market is sorted that they will not get anything out of India. Okay. And Indian market is very well sorted as far as its S&D is concerned.
My last question, Rahil, and I'm just going to pick your brains onto this one. So even as we are looking to ensure that there is enough availability on affordable prices, and we have seen that happen in various essential commodities, starting right with edible oil to rice to atta, there is Bharat Dal happening, wheat imports perhaps may happen from Russia. There are various reports and so many steps that the government has taken. So even if in case of sugar, some step has to be taken, even if it's for short term, let's say, even if it comes at the cost of ethanol, let's say, what would you say? Does a short term measure like this works? What would you say the government has an option on? What could really happen?
I think, Manisha, domestic is very well sorted, as I mentioned to you. I mean, at 28.5 million consumption, we are already having 5 million of opening stock and 29.5 of production. So I think we don't need more sugar in the country. I mean, we have enough. And ethanol diversion, if any shock comes in over there, I mean, it's only going to decrease the prices, and any decrease in price means FRP payment could be delayed, arrears will increase, and long term it's going to harm the industry more than short term. So I think.
Rahil, if I don't focus on industry too much right now, would you say it's a good move for consumers?
Not really, because the prices are affordable on sugar. Okay. If sugar prices would have been in the following the world market, then I would have said it's a smart move for the consumer. I mean, today we are subsidizing, as one of my friends said, we are subsidizing cakes, chocolates, Coke. So I mean, we are subsidizing basically the consumer currently. The sugar prices have not been run away by any standard. So I think there is just no reason to look at sugar as a prices for consumer. I think it's very, very at an affordable levels.
All right, Rahil, thank you as always for joining us and putting limelight on various factors and points of discussion there. So clearly, the street is still awaiting on whether or not we hear something from the government. As of now, from what we understand, there is no decision on this yet, but the markets clearly have been rife with lots of conversation and rumors and forwards. So, of course, there's no point other than to wait out and see if actually something comes out.